Tandon, and his funds are doing exceedingly well. When we started interacting with Sandeep, he never had a smile on his face. That time it was business pressure, pressure of starting a new fund. He didn't know how he will survive in this mutual fund industry. But now every time we meet him, he starts with a smile because his funds are almost in the top quartile. So far so good, Sandeep. It could be beginner's luck. Are you confident that you will be able to sustain this outperformance?
I tell you, this is a success of our differentiated framework, because the challenge which industry and we all have grown with that, we have always lived with the concept of just valuation. Okay. Ultimately, valuation is a derivative of price. Okay. Anything which is dependent on price, and if you only depend on that variable, then obviously your analysis will be biased. And this is the reason we brought the concept of bringing liquidity analytics or risk appetite, which are macro in nature. So we give two-thirds weightage to macro and only one-third to the company specific. And that has really helped us because we all live in a very dynamic style of dynamic market. So you can't, your investment style can't be static or what you have been practicing for 20 years or 30 years. So something has to change. So we are trying to incorporate new concept, trying to incorporate new data point. And that's the way we are able to differentiate our product. And you have seen the outperformance.
We are at 17,200 on the Nifty. It's been an 8% plus surge on the Nifty, almost a 10% surge for the Bank Nifty, and a 20% surge for autos from the recent low. Do you think this is as good as it gets and we've topped out for the year now? Sandeep?
Nikunj, can you repeat? I just missed you out. It was not very audible.
Okay. We've had a good July. And are we in for a great August, or you think this is as good as it gets?
Okay, the way we look at, if you recollect in the month of June when we released our note, we talked about reflex rallies on the cards. It played out beautifully. Okay, the challenge which we look at, if you ask me, despite market has rallied globally, but the conviction is still not there. If you talk to any large client, I'm not talking about retail. Retail has been the driving seat and they have been demonstrated. They have been showcasing more maturity than the ultra HNI or the family office. The conviction is not there. Okay, the inflation narrative is actually back of their mind. So they are not able to really participate. That's the reason I believe that even we have rallied, market can even recover further from the current level. The participation is missing. Okay. So there's a very high likelihood that people will be forced to participate at higher levels, which can lead to smaller correction or consolidation in market for 8, 10, 12 days sort of thing. And then this rally to resume further because the left out feeling is very, very large. People will look for a buying on dips. So far has been, if you look at last many narrative change from buy on dips to sell on rallies. I think this narrative on buy on dips will come back, particularly for India.
If you look at the market behavior, Sandeep, are you not worried about the way how mid and small cap stocks have made a comeback? Suddenly the dead stocks have come alive. Suddenly the stocks which were considered as penny stocks have become the heroes. I'm talking about last week's price action. So it's a typical market. Starts with a lot of disbelief, then you see rally in leadership stocks, then you see outperformance in smart mid cap stocks. It's the last part which is where things get dangerous, when the tail starts wagging the dog. And the screen is telling me that we are reaching there.
So Nikunj, it's too early for that because this rally is not even 15, 20 days old. Decisive move has only come in last 10 or 12 trading session. Okay, it's more of a short covering rally which you have seen in the market. I don't think real participation has even started. Okay, so it will be premature to take that stand right now. And I think it's a very early stages. Yes, I agree with you that some of the stock has also rallied. One has to be very careful. But if you look at the thesis which we have been talking about, every market has given you some opportunity. We were very early to talk about technology peak out. Similarly, we were early to talk about capital goods rally or auto sector. I think the challenge is that if you can manage or rotate your sector or stock in an effective manner, it can give you better risk adjusted returns. Okay? So it's all about how well you select a particular sector or stock in the current environment. So environment plays a role, no doubt about it. But it is our belief that, from a behavior perspective, we always say, whenever you see complacency set in, Right now also, I don't think up to that level of complacency is there. It's a people with some amount of fear is still nibbling, but that complacency is still not there. Maybe if you see in 8-10 trading session, the complacency get built. Let's say today we are seeing early signs of complacency in auto, with Mahindra, what has news has changed the perspective. As Scott's came was slightly below expected numbers, still stock has turned positive. I'm just giving you a behavior perspective. Okay, how this is some sort of euphoria, you can say. Maybe not. The answer is yes. So maybe this is the area. Sometime when you see euphoria or complacency building, you have to prune down, and whenever you see panic, okay, that's a time if your conviction on sector or stock is there, one should definitely increase.
Good morning. So, from everything you're saying, if one were to just hear you, you're basically saying the worst is not behind us. Don't get carried away because you've seen the Nifty go from what, 16,800 to 17,200 in just 4 trading sessions.
No, I'm not saying that. I'm trying to say, if I look at from a global perspective, we still believe we are in a structured bull run for both interest rates and inflation. Whatever you have seen a trailer of the global macro, which is settling down now. Last time also we talked about by August we expected inflation narrative will settle down. But from India perspective, our view is that we have seen the worst for the current financial year or current calendar year, whatever 15,200. That is the worst we have definitely seen. I think things should only improve. India is in a very unique situation. I think we are more constructive on emerging market, Asia-centric emerging market, and India particularly. So we are not saying that worst is not over. I think definitely worst is over, but don't expect anything linear in life, because if globally things are still not very stable, global macros are big headwinds, then that's another area you have to be cautious. You can't just be going all out sometime.
Don't go all out as yet. Be cautious. But in the month of July, like Nikunj said in the opening, we've seen FIs become net buyers, right? Small amount, less than $1 billion, but we'll take it. We'll take it any day. And as that happens, Sandeep, and when you say buy on dip strategy, etc., rotation, what are you going to bet big on though? Is it going to be banks? Because those were the ones, the financials that were hammered completely out of shape with the heavy FI sell off.
See, just to add, like this is again a very big myth, like people talk about dollar strength or people talk about high selling. See, everything is relative in life. We have to understand the portfolio, global portfolio manager. The India weightage has increased because of non-performance of other market, and that's the reason they were forced to sell. It's not like it is not mature or to premature to conclude that there was a problem in India and hence they were selling. It's a relative game globally which plays out. On relative basis, India weightage has increased, so they were forced to cut down. Now you see global market has recovered, India weightage is also settled down, and rather some buying is emerging. So India, and similarly on the dollar front, we talk about the rupee has weakened. Actually, it is a pair. So Indian macro are far superior. Obviously, if dollar rallies, so it's not a dollar strength, it's a weakness of euro, it's a weakness of JPY. And that's the reason we have seen spike in dollar index. So it's on relative basis, yes, it looks fine, but in absolute weight, India is in a far better situation. So coming back with this background, obviously, what are the thesis we are talking about? We are talking about value as a thesis for a decade. We're talking about manufacturing as a thesis, whether you talk about capital, industrials, engineering companies. So they are all interconnected. You have to look for opportunity sometime when there is a complacency, you have to bring down, but whenever there is a crisis, you have to look, provided you are convinced. We are convinced these are the areas which are being beaten down, neglected for years, maybe for a decade. Those are the thesis. Media is another sector which we like. Irrespective of noise which is there on the metals, we think commodity as a cycle, we are still in a structure bull run. So those are the areas because they are beaten down name, very, very low valuation, ownership is hardly anything. These are the names where we have to capitalize. Similarly, we like banks, okay, but within banks, we like more PSU banks rather than the private sector banks. Okay? Given the weightages, we like to skew our portfolio toward PSU banks and the large PSU banks. I'm not talking about the smaller names, okay? So maybe top 3 PSUs names should be part of it.
So Sandeep, if first half was dominated by value, PSU banks, names like ITC. What will be the dominant theme for the second half of this year? Because markets are now globally, they are not worried about inflation, they are worried about recession. You pretty much know that interest rate hike cycle will end sooner than later. This is a very different narrative than what we had in the first half of this year, when everybody was worried about inflation and interest rate hike. Now everybody is worried about growth and recession.
So, Nikunj, like we have been saying that second half of 2022 will be far superior than the first. Okay. Now, obviously, if value as a theme is much larger call for a decade, that does not mean that everything is linear. So that's the reason if you notice that till April, value thesis right from November or September, November 2021, value did very well. And May onwards, I think growth has come back. So I think there will be phases we have to part of your portfolio, but we have to keep in mind from a longer term perspective. The longer term perspective is all about value thesis, which is emerging. Then I will like to skew my portfolio, one's portfolio towards value as a theme, because that is a much larger thesis which is playing out. We're not negative on growth, but again, growth becomes a tactical bets. You have to play on opportunity, and like I said, technology, which has been beaten down, corrected a lot. Can you give you a reflex rally? Can you give a decent return from the current level? The answer is big yes. And I'm not talking about Indian globally, but can you say that whether I like to say technology should be part of my core portfolio? The answer is big no. That's the way we will differentiate our thesis in terms of spotting this opportunity, both from the core portfolio as well as non-core portfolio.
Just going back towards value stocks, cyclical stocks like public sector banks more than the private sector lenders, seeing an opportunity in metals as well, a contrarian voice over there. Sandeep Tandon of Quant Mutual Fund, thank you so much for being live.